Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 5th, 2025, and we're diving into Docusign's recently released Q2 fiscal 2026 earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Docusign's performance, especially given the significant developments in their intelligent agreement management platform and their financial results this quarter.
Revenue and profitability overview. Let's start with the top line. Docusign reported a revenue of $800.6 million for Q2, marking a 9% year-over-year increase. John, what are your thoughts on this growth?
It's impressive, especially considering the competitive landscape. The growth is primarily driven by their subscription revenue, which also saw a 9% increase. This indicates strong customer retention and new customer acquisition, particularly in their eSignature and CLM businesses.
And what about their profitability? The adjusted EPS came in at 92 cents, significantly beating the forecast of 23 cents. How did they achieve this?
The substantial beat in EPS can be attributed to their operational efficiencies and cost management. Their GAAP gross margin improved slightly to 79.3%, and they maintained a strong non-GAAP gross margin of 82.0%. This shows that Docusign is effectively managing its costs while driving revenue growth.
Strategic initiatives and product innovations. Docusign has been making strides in innovation, particularly with their intelligent agreement management platform. Can you elaborate on their recent product launches?
Absolutely. Docusign has introduced several AI-powered capabilities within their IAM platform, such as agreement preparation and ID verification with Clear. These innovations streamline the agreement process, making it more efficient and secure. Additionally, the introduction of Maestro workflow templates and SCIM integration enhances user management and workflow automation, which are crucial for enterprise clients.
How do these innovations position Docusign in the market?
These innovations solidify Docusign's position as a leader in the agreement management space. By leveraging AI, they are not only improving their product offerings, but also setting a high bar for competitors. This focus on innovation is likely to drive further adoption and customer satisfaction.
Financial health and cash flow. Moving on to Docusign's financial health, they reported a net cash from operations of $246.1 million and a free cash flow of $270.6 million. What does this tell us about their financial position?
These figures indicate a robust financial position. The strong cash flow allows Docusign to invest in growth initiatives and return value to shareholders. Their cash and investments totaling $1.1 billion provide a solid buffer for future investments or acquisitions.
They also repurchased $201.5 million worth of common stock. How does this impact investor sentiment?
Stock repurchases are generally viewed positively as they indicate management's confidence in the company's future prospects. It also enhances shareholder value by reducing the number of outstanding shares, potentially increasing earnings per share.
Guidance and future outlook. Looking ahead, Docusign has provided guidance for the next quarter with revenue expected between $804 to $808 million. What are your thoughts on their future outlook?
The guidance reflects a steady growth trajectory with a 7% year-over-year increase. Docusign's focus on expanding their AI capabilities and IAM platform is likely to drive this growth. Their non-GAAP operating margin guidance of 28.0% to 29.0% also suggests continued operational efficiency.
What should investors keep an eye on moving forward?
Investors should watch how Docusign executes its AI and IAM strategies, as these will be key drivers of future growth. Additionally, any updates on their go-to-market strategies and customer acquisition will be important indicators of their market position.